So RD loans and rural developments, what are the benefits? The benefits are really simple as this. You get to purchase a property, a lower to moderate income. You don't have to have as high of a credit score, basically 620, and you get to purchase a property. Now, what's also a benefit is you have private mortgage insurance. And private mortgage insurance is an insurance policy that is covered on you and the property. You're the owner of the property. The property has a title policy on the property. Now, that mortgage insurance is in case you default on the loan. In other words, if you were to lose your job or something traumatic were to happen, that protects that lender. And the reason why they do that is because the likelihood of something happening could happen. And so if you don't put down 20%, they want you to pay private mortgage insurance. However, it's on a calculated scale, and when you do an RD loan, this USDA RD loan, it's much lower on an RD USDA loan than a traditional FHA or even conventional loan. So you pay less on a monthly basis for that mortgage insurance premium. So when it comes to an RD rural development USDA loan, people ask me about the interest rate, and I tell them, look, the interest rates are pretty much the same as they are with an FHA or a conventional loan. And what's really cool is if you're anywhere from a 620 to a 720, 740 credit score, you're going to get the prevailing rate, whatever that rate may be. Today, we're looking at mid-December, and the rates are running around 7%, a little bit below 7%. But here's what's really interesting. You get a great rate with the USDA RD loan. It's fixed. No one can touch it. Your payment's not going to go up when it comes to interest and all that. Now, I know your payment can go up if your insurance goes up and your taxes go up, of course, right? We got to pay taxes. But at the end of the day, people also need to consider these people purchasing these big houses, 700-800 million plus. Most folks don't realize that they're paying a higher interest rate because they are at a higher risk loan. Yeah, if the mortgage company gives you a loan for $1 million on a piece of property, whether it be a commercial piece of property or a residential piece of property, it's a higher rate than if you purchase a property less than, say, $550,000, $600,000. So how do you get qualified for this RD USDA loan? First, you need to do your research and get with a good lender. We have lenders we can refer you to, or you can just do a Google search and find someone with RD USDA experience. And you want to talk with them and tell them what you want to do and your plans. And they'll ask you your income, they'll ask you your credit, they'll ask you your bank statement, they'll ask you your time on your job, and they'll verify that information with your employer, with your creditors, pulling your credit to make sure that you are in fact approved, not just qualified, approved for the loan. Now, what's really cool is they don't have to go off this 24 to 36 months of credit. They can look at your most recent 12 months of credit. So that's why I always tell people it's so important to pay off your debt, pay off those credit cards, sell something, and it's not for the rest of your life, but you have to make a shift and a change in your life to say, I don't want to rent anymore. I want a backyard. I want a garage. I want a living room. I want to crank up my music and not be disturbed. I want to sit on my back porch again. Whatever it may be. A house buys you a lifestyle. It buys you your independence. And that's why it's so important to buy a house, because once you buy a house, you're not relying on someone else to take care of you. You're not relying on someone else to take care of your appliances. You're a big boy and a big girl, and you're now an adult, and you get to drive home, pull in your own driveway, have your own piece of land that you worked hard for. No one can take it from you as long as you're paying your payments on it, because they give you the money secured by the property. You pay your mortgage, you got a house, you got a back porch, you got tall ceilings, walk-in closets. It's your home. So they're pre-qualifying and getting approved for RD loan. Let's jump back to that. You have to have an income, but your income can't be too high. And that income runs around $104,000 to $105,000, but it really truly varies depending on the county that you're in, the parish that you're in. If you're in Louisiana, their parish is down here, or the state. So you have to look at that. Now, I always tell people, go to USDA.gov. USDA.gov gives you all this criteria with all these credentials, and it tells you exactly what you can and can't do based on specific zip code, as well as county, as well as city. So in purchasing these properties, you're going to look at a minimum income of around $31,000 based on the current prevailing rate today. If you can get your income to $31,000, your credit to 620, and 2 years of job history, you can purchase a house or an investment property for that matter for no money out of pocket through this RD USDA loan program. So what's the negative with RD USDA? What's the negative in terms of purchasing a property through this type of program? You have to consider this. When you purchase an RD USDA loan, you can't live within the confines of major bigger metropolitan cities. So you can't live right in the dead heart of Atlanta or Orlando or Miami or Nashville or Chicago. You have to be on the outskirts in what they call a rural area. So Wayne, can I do this where I live? What states qualify for this USDA RD loan program? All 50 states. However, you need to go to USDA.gov and you can put in your county, you put in your parish, zip code, do your research. Do your due diligence and you can find out what's my income, how much can I make based on the city, based on the county, based on the zip code. What if I make too much? How much do I have to make? Where can I be? You can physically put in a property address. So you can look online, find a home, put in that property address, and it will tell you whether or not that house, that specific property address, you can in fact get an RD USDA loan on. So it's really important that everyone know this product, as they call it a product. It's USDA RD. So whether you're buying, building, flipping, owning, selling, it doesn't matter. You need to educate yourself to this. So leave us comments, ask us questions, let us know how we can help. I'm Wayne Turner. I've been in the real estate business for 26 years and I'd love to help as many people as we possibly can. Check out our other channels. We're on TikTok, we're on Facebook, we're on YouTube, we're all over the place. Our goal here at Turner Real Estate Group is to give you the most informed information so you can make the absolute best decision for you.